Hello friends, welcome to learning sessions and good morning to all of you. And still, if you're having any issues related to the audio video quality, do let me know. And further, want to mention one thing that our doubt sessions in bilingual language, that is Hindi mixed English language, are going to commence from 15th of the March. So if you'll be enrolling in the course JIB Early Bird Pack, you'll be getting the access to them now. So do enroll into them and further start preparing for the same. So as to enroll into the course, you just need to WhatsApp JAIB to the number 83609 or you can simply be downloading the application from the link that is iibf.info/app and use the ORG code, that is organization code GEGKT. So the topic that we are going to start with today is related to the accounting period concept. Now, if we are considering that we are a going concern, right? We are going to be there for indefinite period of time. Now, we are to match ourselves. We are to have a check on our performance. So, if we are going to run for a longer duration, we have to record all the transactions. So, we divide each and every period into a particular period, regular intervals, we can say, so that we can match the particular incomes and expenses to that particular accounting period, right? Like we do consider financial year from 1st April to the 31st March of the next year. That's an accounting period. Now for that particular accounting period, we'll be considering all the particular incomes and expenses for that particular accounting period, and we can get to know that what is our position, right? Otherwise, if we are not considering any accounting period, we are just going on, we won't be able to match our performance. Even if we are to match our performance to industry specific industry or specific company over there, so if it is also following the same concept, it would be very much easier to match. Like we simply say that the TCS has made this much profit this year, Infosys has made this much profit this year. Now we can match their performance, that whether TCS is performing well or Infosys is performing well. How come this is possible? Only if accounting period concept is there, because they all are following the same accounting standards. Now, when the accounting standards are same, we can simply be looking into the fact that the revenue of Infosys is more than the TCS, right? We can get to know the PE ratio for that particular accounting period over there, right? And definitely we can make a comparison between them, right? So that's the accounting period concept. Now let's have a look at the particular concept that we have learned so far. You can be getting the idea again. So first one, it was related to the business entity concept. Honor is very much separate from the business. Money measurement concept, only those things which can be measured in the form of money should be recorded. Qualitative factors are not to be recorded. Further, cost concept, we are to record at the cost price, purchase price plus any of the expenses that they have made for acquiring that particular asset, not at the current market value. But for the current assets, we have to record at the cost price or the market value, whichever is lower, right? For the dual aspect, every single entity or a transaction is having dual concept, two sides at least. One is debit side, one is credit side, and the balance sheet equation says that the assets are equal to the capital plus liabilities. Further, it's related to the realization concept, that amount that is paid to you in advance is a liability on you. It is not realized. You can be considering it as a revenue only when it is realized, right? Not before that. Historical records concept, that only the historical transactions are to be recorded. You should not be going for the let's say future transactions cannot be recorded, right? You can only be recorded those particular events those have already happened, right? That was a historical concept. Further, going concern concept, that the entity is going to be there for a longer duration. It is not going to liquidate in the near future, because if it is going to be liquidated in the near future, then you are to basically count on the current cost only, not related to the cost prices or the previous cost over there. And we do charge depreciation for that. The deferred revenue expenditures, basically set of at the for the longer duration. That's also due to the going concern concept only. Further, it is a accounting period concept, that life of a business is divided into shorter terms, we can say artificial time periods are there, so that we can regularly measure the performance of that particular business, right? So that's the case. And further, it's related to matching concept, that we should be matching the particular expenses to the same financial year. We should be matching the particular incomes to the same financial year, so that we can be having a accurate profit loss position of the particular company, right? Now, after that, it's related to the main conventions of accounting. Main conventions of the accounting. The one, it's related to the accounting of full disclosures. It means that the entries, every single entry, should be made in such a manner that if even some information is not clear, that should be clear to the owner or the viewer or the consumer of those particular statements. So even when you do when we enter a simple transaction in the system, now in Finacle over there or CBS over there, we do add a narration toward it. For single transaction, it can be done through the narrations, and for the financial statements, it can be done through the notes to the accounts, right? So we should not be concealing or hiding any of the information from the outsiders, right? That's the case. Secret reserves should not be implemented, should not be maintained, right? That's a very important point, that we are not to maintain any of the secret reserves, and the accounts should be prepared very much honestly, and material information whatsoever is material means which whatsoever makes sense, whatsoever should be disclosed, whatsoever that could matter should be disclosed. Further, it's related to convention of materiality. Now, convention of materiality says what? Now, for every single fixed asset, we are to maintain the depreciation account. We are to depreciate that particular fixed asset. Let's say case that you're having a car, you purchased it for rupees 10 lakh for the company. You have to depreciate the value, because its value will be depreciating over the time, right? So we have to provide depreciation for the same. But now let's say case that I purchased a wall clock, and let's say we purchase a wall clock for rupees 500, and that is going to be there for the next 7 years. Now, should I be providing the depreciation to this rupees 500 for the next 7 years? No. Why? Because it is not that much material. It is not going to matter as such. I can be just be considering it as a stationary expense or some expense or some random expense, but not related to a fixed asset. I won't be booking it under the fixed assets. I won't be charging the depreciation toward it, because it will be making the books unnecessarily voluminous, right? So that is not required at all. So that's the convention of materiality. So all the material information should be recorded, right? Not recorded related to insignificant items should not be recorded. You can be recording them separately, right? But not related that you need to write them particularly in the main books over there. Further, it's related to convention of conservatism, very much important. It's the convention of conservatism. We also say it to be the principle of prudence. This is very much important. Why it is important? Because whenever we are going to record the transactions, whatsoever the gains, future gains are there, those are to be neglected. We are not to take care of the future gains or incomes. We are to ignore those future gains or incomes. But if there is going to be any contingent liability, or let's say future possible loss, that should be recorded, right? So for the future loss, you can be having the provisions, you can be having the contingency reserves, right? So contingency reserves and provisions are basically the due to what? These all are due to the convention of conservatism only, because it clearly says if there is going to be any future gain, it should not be considered, but if there is going to be any future loss, it should be considered. This is said to be the principle of prudence, right? So that's very much important. Further, it's related to convention of consistency. Now, what is convention of consistency? That whatever the accounting standards or accounting principles or accounting guidelines you are to follow or that you selected, you should be following those guidelines for the longer duration. That should you should be following for the present also, you should be following it for the future also. And whenever it is to be changed, you should be letting know the impact of the change. That's the convention of the consistency. So different conventions were there. Let's have a look at them. First of all, it's related to convention of full disclosure, that every single transaction narration or transparency is to be maintained. Every material information must be given and should not be concealed. Convention of materiality, that every significant transaction should be recorded, and if it is insignificant, it should not be taken care of as such. Like I have already given an example. Convention of conservatism or principle of prudence, that if there is going to be any future loss or liability, it should be recorded, it should be taken care of, but all the possible incomes and gains should be ignored, right? That's the principle of basic prudence. And further, if we look at the details, as per the convention of full disclosure, no secret reserves should be there and all the material information should be disclosed. And as per the convention of materiality, only what matters should be recorded and materiality must be relative. And further, convention of consistency, that we should be sticking to the methods that we are following, and if there are any changes, we should be able to compare those changes, right? So that's the case. After that, it's related to the double entry system. It's related to the double entry system. Now let me just tell you in detail about the entry, journal entry that we did before. I told you that we do purchase. Let's say case that we have purchased the inventory or materials for rupees 20,000, right? We have purchased the stock material for rupees 20,000. Now what will be the journal entry for this? What two accounts will be involved? First of all, the one, it will be the purchases account, and the other one, it's related to cash account. Now purchases account is actually the nominal account, because purchase is an expense, so it's a nominal account. All the income and expenses are nominal accounts, and cash is an asset. Cash is an asset, so it is a real account. So we'll be learning in detail about the journal entries. I'm just letting you know about these details right now, right? So for the nominal accounts, the golden rule is debit all the expenses and losses, credit all the incomes and gains, right? So purchases is what? Purchases is an expense, so we are to debit the purchases account, right? And for the real account, the golden rule is debit what comes in and credit what goes out. So if you're going to receive the particular asset, you have to debit that account, but if you're paying it off, you're giving it away, you have to credit that particular asset. Now when we purchase something, we give away the cash na, right? So it is going out, so debit what comes in and credit what goes out. So cash account is to be credited, right? So this is how we basically get to know that what account is to be debited, what account is to be credited, right? Now let's come back to the double entry system. There are two kind of system for the record keeping purposes. One, it is a single entry system, and the other one, it is a double entry system. Now the double entry system is a very scientific system. Double entry system is a very much scientific system. You get to know the mistakes if there is any, because when you will be doing the balancing, you'll get to know the mistake, arithmetic mistakes. So the single entry system is very much easy to implement, very much easy to understand, but this is not scientific, this is not reliable, because this creates totally incomplete record. It gives you the incomplete financial picture, right? Because you cannot be tracking the accounts as well, right? But this is better for the small businesses because there is lesser ambiguity in the same. But if we look at the double entry system, This is a very scientific system. You're having the scientific standards, because I told you that every single transaction is having at least two aspects, right? One debit aspect and one credit aspect. It could be the case that the transaction could be having more than two debits or more than one credit, more than one debit or more than one credit, but the transaction is having two aspects, debit aspect and the credit aspect, that is right. So every single debit will be having the credit part also. That is why we do follow this, because this is why, because we do follow the balance sheet equation, that is assets are equal to capital plus the liabilities, right? So the double entry system gives you a complete actual financial view. That is very much important, right? So let's have a look at it. The single entry system is time saving, it is economical, but is not scientific, right? Because some transactions are not recorded toward it, only one aspect of the transaction is recorded. Like, you'll either be recording the debit side or you'll be recording the credit side, but not the dual aspect is recorded. And further, under the system, see, for the nominal and real accounts are not opened except the cash, right? You should be noticing that under the single entry system, nominal accounts are not opened, real accounts are not opened, just the cash account is open. Under the real accounts, only the cash account is opened, otherwise nominal accounts are not opened. So the accounts which are maintained by way of the single entry system, those are incomplete, those are not systematic, and therefore that system is not reliable. Small businesses can be using it, they can be following it because of the easiness. Otherwise, we have to follow the double entry system because it is very much scientific. Every single entity is having dual aspect, debit side and credit side. Balance sheet equation is being followed. What is balance sheet equation? Assets are equal to capital plus the liability, right? So that is being followed. So every single business must be following the double entry concept. It is very much systematic, it is scientific in nature, and it describes each and every transaction, and all the accounts are open, whether it's a personal account, it's a nominal account, it's a real account, all the accounts are being opened here, right? That's the case. Further, let's have a look at the principles of the double entry system. Every transaction, two parties must be interested. One, it is debit entry, second is credit entry. Like I told you, whatsoever the part you consider, even the if the capital is contributed, even some withdrawal is being done, even if you sell the goods, like if we sell the goods, in that case also two entries will be there. How come? See, if you have sold the goods, so sales account will be involved, and if you have sold the goods, either you will be receiving the cash or bank balance, so cash account will be involved. So two accounts will be minimally be involved, right? And further, both the aspects are recorded in the books of account. Twofold effect is there, so you cannot miss the transaction. Let's say even if one entry is being done wrong or posted wrong, you can get to know by the second entry, by the second leg, right? So the double entry system is a complete record of the business transactions, and it gives you complete picture related to it, and you can check the arithmetic accuracy as I told you. Like we do go for the journals, then ledger, then the trial balance is prepared. Trial balance is nothing but it's like checking the arithmetic accuracy. Like the total of the debits and the total of credits must be all equal, right? So if it is matching, that's the trial balance is being done. Is that clear? So it gives you a clear picture related to profit and loss, because profit and loss can be prepared na, all the accounts will be opened, profit and loss can be prepared, and balance sheet can be prepared at any specific period of time, point of time, right? So this is very much systematic and scientific one, and it prevents the commission of fraud, and if a fraud is committed, it can easily be detected. That is why in CBS it is very much easier to detect the frauds, right? Further, it's related to the revenue recognition and the realization. No, we are to recognize the revenue when the sale is actually made. Let's say case A promised that I'll be buying product from you. That I'll be buying product from you after 2 months. B cannot record it as sale because it is not realized, right? It will be realized like when actually the product is sold by person B to person A. When the delivery has been made, right? When the payment has been made, then only it can be realized. Let's say when the B completed the delivery and the B is having the right of recovery from person A, then we can say, ha, bhai, it has been realized. You can be recognize the revenue. Till realization, you cannot be saying that it is completed. The sale is completed, and further you cannot, take into account the profits. It cannot be done. Let's take the case from the banking point of view. Person A has taken a loan from the bank and he is paying the quarterly installments. He's paying the quarterly installments. And the installments get due in the month of January and in the month of March and June and for the, let's say, October, right? In these months, installments get due. Now, in the month of February, in the month of February, the bank can take into account the amount which was to be received in the month of January, but not related to the amount which is to be received in the month of March. Getting it? That is, when it is realized, when it is due, only then it can be recognized as revenue, otherwise not. Now there is one important point, that's accrual basis or cash basis. In general, in banking, we do follow accrual basis accounting. But for the non-performing assets, we do follow cash basis accounting, right? For the in general account, we do follow the accrual basis accounting. How come? Let's say case that the interest is accrued, interest is accrued, right? And it is payable. It is payable and accrued, but when it is due, you can be considering it as an expense. And even if it is accrued, it is an expense for you because you know that you need to pay that much interest to the customer, right? Let's say if you're having 10 crores of deposit with you, you know that you need to pay this much interest to the customer. You're accruing the interest. Let's say we were paying interest on annual basis, on annual basis. After 6 months, for this 6 months period, for 6 months period, 10 lakh of the interest was to be paid. You need to pay the interest after 1 year, but you know that for this much date, for this much time period, you need to pay 10 lakh of the interest. So that is interest accrued. Accrued interest that is payable, right? And that will be considered as an expense. That will be considered as an expense, right? But in case of NPA, in case of non-performing asset, only that income that will actually be received will be considered as a revenue. But for other loan accounts in general, let's say case a person has taken a loan from you and his installment went due on 31st March. Went due on 31st March. He has not paid the installment yet, but you can still be considering that particular amount in your revenue sheet, right? But if it was an NPA, then only the actual amount that you are going to receive, you'll be considering it as your revenue, otherwise not. So for non-performing asset, it is a cash basis accounting which is being followed, but otherwise the banks do follow the accrual basis accounting, right? So you should be understanding the difference between the receipt of the cash or right to receive the cash. So for accrual concept, there is a distinction related to it. It's not required that you should be actually be receiving the cash. Even if you're having the right to receive the cash, you can still be considering it as your revenue. But for cash basis accounting, it is that you need to actually receive the cash, then only can be considering it as your revenue, otherwise not, right? So that's all which is explained over here. You can learn well from here. So that was all about this second unit for the module A. I hope that you must have understood the concepts related to, and that will be all. And if you want all the previous sessions, all the previous videos and PDFs, notes, questions, make sure to download the application from the link iibf.info/app. And if you're iOS user, use the ORG code GEGKT, or you can simply WhatsApping me to the number 83609 44207 writing JAIB, and I'll be sharing all the details with you. Thank you so much and see you again.